Hello everybody, welcome back to make a quick video on Bitcoin. So we've had a bit of a pullback, to say the least, bit of a dump I'd say. The whole market sort of got that relief yesterday and over the last few days really, and I still think that that's going to be the case. Altcoins especially, they look like they could really break out. We spoke about it on the live stream about how all these altcoins are at significant supports. Loads of them, actually brewing really good setups. The only thing it needs is a healthy Bitcoin to stabilize the market. And that could mean that Bitcoin goes sideways or up, as long as it just doesn't go down, right? So if you think about where we were from the peak to the bottom, even on today's candle, we've got a massive wick at the top, wick to the bottom. It's a 6% difference from the top to the bottom, and we've come down to test the support basically at the 20 moving average, the center of the Bollinger Band basically. Now, obviously, we've been looking at this for a little while now, this being the major accumulation zone all the way down to basically 40, which is, you know, still on the cards, but kind of unlikely, but still on the cards. And the top area being 29, my god, 49,500, right? So as we speak at the moment, we are a little bit below that, but support on the 20 moving average, the 20 daily there, is always a good place to be, because if you're thinking about Bollinger Band strategy, the Bollinger Band strategy is if you're above the center, you're 65% more likely to remain above it. The odds aren't amazing, but they're still in your favor, so the bulls still have the upper hand despite this pullback of 6.5%. So what we'll be looking for here is, as opposed, this being the low really, and if this were to break down, then we come back down, potentially all the way down to 46,500, and we have to reassess at that point really, because we are looking for this formation to resolve, preferably to the up, within a week or two really. We did that measured move from the top here to the bottom here, and that brought us to the equivalent accumulation time frame roughly about the end of the month. So we are kind of looking at this sorting itself out, to be honest, over the next few days. But that doesn't have to happen just because the time wise. It just refers to the fact that consolidations equals accumulations, and then once that's over, hopefully it will resolve to the up. Now, obviously, moving into next month, it's the start of the new year, start of the first quarter. The traders will be back. They will be back. At the moment, technically, they're still on holiday, which is why my videos are far and few between at the moment, just because of time-wise, just enjoying Christmas for what it's worth. Basically serving children whatever it is they need to be served to them at that very moment in time. So I imagine that the world is in a similar kind of vibe, and there's times to trade and there's times not to trade. I think this is a time not to trade. Look, we bit the bullet. We accumulated in an accumulation zone. It looked relatively good. Now it's just a matter of just waiting to see if it actually does resolve to the up, which I think it does. And certain altcoins I've been picking up over the last couple of weeks as well. Not loads, but some. And in moderation, obviously, because the market could just take a tumble. We don't know for certain. There is always reasons why it could. Now, if we go to the weekly, we're still very much in favour of a continued uptrend on a weekly, and weeklies are my favourite charts. And this one, it does show that being above a massive green cloud, which is facing up, being above the 50 exponential, which we kind of tried to double tap, still looks pretty good. There are certain warning signs on this, like the bearish divergence on the weekly, but you could argue in a way that possibly is not relevant at this stage, with two large taps on these higher highs. Maybe on the next one, but there could be famous words that come back to bite me. But on the shorter term time frames, being the daily, it does look actually okay for potentially just a retest of that center of the Bollinger Band, basically liquidating all the people who are getting very excited. I saw, obviously, I follow CryptoFace just for good value. Really, he's all right. I quite like him. I wouldn't buy the market cipher, but I do like him. How can you not like him, really? And so I think when he did his video yesterday, didn't he, to making some decent trades? So I didn't see it, but I assume they're profitable. I think most of them are. I think a lot of people basically use his videos as an indicator itself and just go hard and heavy. And I think what's happened is largely this was a liquidation event, lots of money entering the market, and then lots of leverage entering the market. So I would expect that this was a liquidation event that took place. But if we look at the 4 hourly, we more or less tagged the 200 exponential as a resistance. So that shouldn't really come as a surprise. We struggled on our first pass here, very, very hard to reach. It came down to test, like I say, a bullish retest of the top of the accumulation zone, rallied up all over again, overshot, which does suggest, overexcited, leveraged armchair traders, and then absolute wipeout. So yeah, it's looking a little messier now. This first pass was okay. This definitely looks a little messier. So again, it's one of those situations where you really should just kind of just sit back and enjoy the rest of your day and allow the price action to tell the story, because while we're in this zone, we should expect to come down to 46,500. We should just expect that. This is still an accumulation range, so we should just expect that would be the case. Being below 49,500, expect this level, and maybe even lower. Being above here is no man's land. No man's land in here. This is basically out of the trenches into no man's land, and this area is, to be honest with you, the worst area to even try and trade in, because this is where the real battle takes place. Because we're out of accumulation. This is your bullish area over here. This is your breakout territory, big time. This whole area here, no man's land. And so for this reason alone, it's best to just sit back and wait. And that, like I say, that goes from 49,500, the end of the accumulation zone, to 43,700 thereabouts, which is entering technically the buy zone, and this would be the breakout territory here. So it's a long area, it's a large area. It's just from where we are right now all the way to the top. That's a 17. So best part of 17.5% from where we are right now, right? Of almost no trade zone, really. And you might think, well, what's the point in having a no trade zone? If we had bought down here, well, this is the idea, isn't it? You do buy down here. This is the accumulation zone. You don't buy in here because we don't know where it will go. You could think of buying in here, and you would certainly. I know it sounds strange to people who are like, why wouldn't you want to buy low? Why would you buy high? Because it's about balancing your risk to reward to those people who are thinking that, scratching their head going, but why buy higher when I could buy low? That's it. You buy low in an established range low, so that's this. This is no man's land, where we could get rejected from. We've seen that already here. This is technically buy zone as well, and this is breakout territory. So this is for the margin traders, really. But anyone who's missed the boat, you should feel a lot safer closing candle bodies above 57,500. But it's a large range, I have to admit. But again, that is a no man's land trade zone. Really, I wouldn't fancy it myself. I'll be okay to stock up on things around here, and certainly down here. Breaking down below here, obviously that's a different story. That's underwater territory. That is potential breakdown of a much larger formation. Being the weekly uptrend, that would be breakdown of the 40,000 and below. So we would have to entertain quite a significant drop down, potentially all the way down to maybe 29. But I'm not talking about that right now, because those levels haven't been hit, and so we can't really talk about them. We can be prepared for them, but we don't need to talk about them, because that's not where we are right now. Interestingly, if we have a look at the weekly hit the 10 exponential, which is again a significant area of support resistance. This time being resistance because we're below it. So the chart is being traded, right, by bulls and by bears, but the no man's land area is definitely an area to be cautious of. That 52,200 being the 10 exponential. That's the first major area to reclaim. And if we think about this in terms of a chart and its moving averages in relationship to price action, it's still okay. We've still got a nice rainbow spread. By that I mean the moving averages in the right place. You've got the 200 simple, exponential, 50 simple, center of the Bollinger Band 21, 21 there, 10. So it's looking okay on the weekly. It's still in an uptrend on the weekly, and we don't have really negative crosses. We've got things facing down, but they don't look that bad. So end of the day, still very much what I've been saying for the last few weeks. We came out of the accumulation zone, we come back down to test it. We may come back within it. I still believe, based upon this weekly chart and other things that we look at generally, Bitcoin dominance, total market cap, all of those things, they're all very much in favour of a continued uptrend. So the weekly seems fine. 4 hourly showed us why we're getting rejected. So did the weekly. The daily is kind of nondescript. We've only got those horizontal lines really, and that support on the centre of the Bollinger Band. So keep it simple. It is a very simple strategy. Bollinger Band strategy on the daily, moving averages on the weekly, and the 200 exponential on the 4 hourly needs to be reclaimed. But for the moment, let's just sit back and chill and watch and wait and see. Time is usually the best component to trades, and I expect that this will resolve in the form of an uptrend. But yeah, we're still within the time frame of the accumulation to complete. We are looking for the next couple of days for that specific time zone, down to the hour to be completed. And that doesn't mean it has to move from there. It just means that we should really be looking at essentially a breakout or continued movement up, reclaiming these zones after then. So we'll say at the beginning, literally the beginning of next month, we should start to see incremental reclaiming of these moving averages and higher highs and higher lows being formed on the 4 hourly and the daily, and which should inevitably lead to the weekly. Other than that, I'm going to leave it with you there. Quite a long video. It's supposed to be short. Now you have a nice day, enjoying the holidays, what's left of Christmas, and yeah, just take it easy. Take it easy.